down is concealing deeper structural crisis.
We must get the companies that are exporting to spend more of the money in Ghana and not just to export and send all the money outside.
And Ghana Revenue Authority targets 3-year nationwide campaign to boost voluntary tax compliance.
We have dedicated the next 3 years as what we call sustained tax education. And the idea is we want to continue to educate all Ghanaians who are earning income and are required to pay tax.
Plus, government records 6th consecutive treasury bill under subscription in latest auction amid a shortfall of 577.9 million cedis. I am Christabel Success Treve. We'll bring you details of our headlines shortly. Thank you for staying with us here on 3FM. Now, the recent moderation in Ghana's inflation figures may be providing a false sense of security, masking deep-seated structural weaknesses in the national economy. Speaking at the Made in UPSA Dean's lecture series, Joe Jackson argued that the country's economic struggle is less about short-term price fluctuations and more about a fundamental discipline problem. Joe Jackson framed the volatile cedi as a symptom of chronic fiscal and monetary imbalances that continue to haunt the domestic market.
To get the cedi sustainable, there are a minimum 2 things that we must actually push. One is that we must seek to retain more of the export value in Ghana. We must get the companies that are exporting to spend more of the money in Ghana and not just to export and send all the money outside. Secondly, we must control inflation and bring inflation down, because inflation itself is one big factor in the continuous downwards pressure on the cedi. Sustainability means that companies can plan. Sustainability means that we are investor ready. Sustainability means that there's no penalty in keeping your money in cedis, in investing in this country. And then we will start to see growth in the business sector and, most important, jobs coming out. So the cedi being sustainable is important. Jobs, growth, holding funds in cedis, encouraging people to invest. All these are important reasons why we should have a sustainable cedi.
You just heard the fellow of the Institute of Chartered Economists, Ghana, Joe Jackson. Now, the Ghana Revenue Authority, GRA, has officially kicked off a major nationwide initiative aimed at reshaping the country's tax culture, emphasizing that national development is a shared responsibility between the states and its people. Commissioner for the Domestic Tax and Revenue Division of the GRA, Dr. Martin Yamburiga, announced that the authority will commit to sustained tax education for the next 3 years.
The campaign is designed to move beyond enforcement and instead foster a culture of voluntary compliance among citizens and businesses. According to Dr. Yamborija, the primary goal of this sustained engagement is to ensure every Ghanaian understands their legal obligation to file and pay taxes.
We have done this under the theme, Know Your Taxes, Pay Your Taxes, Let Us Build Ghana Together. So we just want everybody to know that it is very important for you to file and pay your taxes as required by the law.
Over the next 36 months, the GRA will deploy a variety of educational tools to simplify tax processes and encourage transparency.
We have dedicated the next 3 years as what we call sustained tax education. And the idea is we want to continue to educate all Ghanaians who are earning income and are required to pay tax.
In charge of tax education and training at the Chartered Institute of Taxation, Timothy Boy believes that by demystifying tax laws and showing the direct link between tax revenue and national projects, more Ghanaians will be motivated to contribute.
Everything comes from the taxes, and so we believe that this awareness that we are creating is not the end, it's just the starting point, and people, Ghanaians, will see the benefits of paying taxes, and so that it will all help develop our country, so that you travel and the beautiful things you see out there, you can also see that in Ghana.
Now, Government of Ghana's struggles in the domestic debt market continued this week at its latest Treasury bill auction, ended in a 6th consecutive undersubscription. Seeking to raise 4.475 billion cedis to fund its operations and refinance maturing debts, government fell short of its target by 0.92%.
As government targeted 4.475 billion cedis, investors offered a total of 4.433 billion cedis, but government ultimately accepted only 3.897 billion cedis across the three tenors. The 577.9 billion cedis shortfall marks the 6th consecutive time this year that government has been unable to secure its full budgetary requirement for the Treasury bill market. For the 91-day bill, government received bids totaling 2.756 billion cedis, accepting 2.710 billion cedis at a yield of 4.92%. The 182-day bills offered reached 717.64 million cedis, with government taking 664.37 million cedis at an interest rate of 6.96%. The 364-day bill received bids amounting to 960.08 million cedis, with government accepting only 522.48 million cedis at a yield of 10.12%, while investors offered nearly 99% of the target amount. Government only accepted about 87% of its original goal, with an undersubscription rate of nearly 1%. This indicates that while the money was almost there, government likely rejected some bids, especially in the 364-day category, to avoid paying higher than desired interest rates.
The Governor of the Bank of Ghana, Dr. Johnson Isiama, has disclosed that the bank's 2025 financial statement will reflect significant accounting implications stemming from the country's recent macroeconomic stabilization. Speaking at a meeting with the Council of State, Dr. Isiama explained that while policy measures, including the domestic debt exchange program and tight monetary intervention, successfully reined in inflation, they also impacted the bank's income from government securities. The governor highlighted several outcomes achieved through aggressive monetary policy and open market operations. These include dropped in inflation to 3.2% in March 2026. International reserves reaching an all-time high of $14.5 billion. The cedi strengthening by 41%, reinforcing investor confidence and improved banking sector resilience, now translating into broader credit growth for the private sector. Let's take a look at how the cedi is faring against major trading currencies and how some of key commodities are also faring on the global market.
On the interbank foreign exchange market, the dollar is selling at 11 cedis 9 pence worth. It's recorded no change. The British pound is selling at 14 cedis 99 pence worth. It lost 2 pence worth. The euro is selling at 12 cedis 99 pence worth. It also lost 1 pence worth. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities market, Brent crude is trading at $105.33 per barrel. Gold is trading at $4,706.50 per ounce, up by $15.36. Cocoa is trading at $3,431 per ton, down by $27.
And that'll be all for the business news on Sunrise. For more business stories, please check out our website, 3news.com. I am Christabel Success Treve. Sunrise continues. Stay tuned.